Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 19th, 2025, and we're diving into Celanese's recently released earnings report for the fourth quarter and full year of 2024. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Celanese, a global leader in chemical and specialty materials, has faced a challenging year, and their latest earnings report provides a comprehensive look at their performance and strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Celanese reported net sales of $10.3 billion for 2024, which is a 6% decrease from the previous year. John, can you elaborate on the factors contributing to this decline?
Absolutely. The decrease in net sales was primarily driven by a 4% decline in price and a 1% decline in volume, with a small currency impact. Weak global demand in key end markets like automotive, paints, coatings, and construction significantly impacted their sales.
Despite the sales decline, Celanese reported an adjusted EPS of $8.37. How did they manage to maintain this level of profitability?
The company took decisive actions to reduce fixed and variable costs, which helped them achieve an adjusted EBIT of $1.6 billion. Their focus on cost management and operational efficiencies played a crucial role in maintaining profitability.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.20 for the fourth quarter, but Celanese reported an adjusted EPS of $1.45. What does this tell us about the company's performance relative to expectations?
This is a significant beat, with the actual EPS coming in 25 cents above the forecast. It indicates that Celanese's cost-cutting measures and strategic initiatives were more effective than anticipated, allowing them to outperform analyst expectations despite the challenging market conditions.
Operational efficiencies and future outlook. Celanese has been focusing on operational efficiencies. Can you tell us more about their cost reduction strategies and future outlook?
Certainly, Celanese exceeded their $75 million cost reduction target, primarily in SG&A expenses, to better align with the current demand environment. They've also announced the closure of their Luxembourg Mylar specialty films operations to focus on more productive facilities. Additionally, their project pipeline in high-growth applications like electric vehicles and medical has seen a 24% increase in value, positioning them well for future growth.
What are their expectations for the coming quarters?
Celanese anticipates continued demand and pricing challenges in the first quarter of 2025, with some headwinds from seasonality and planned outages. However, they expect sequential improvement in the second quarter, driven by their ongoing cost management and growth initiatives.
Leadership changes and strategic priorities. There have been some significant leadership changes at Celanese. How might these impact the company's strategic direction?
Scott Richardson has taken over as CEO, bringing over 2 decades of experience at Celanese. His focus is on intensifying cost reduction, driving growth through their AC and EM models, and improving cash flow to deleverage the balance sheet. These strategic priorities are expected to guide Celanese through the current demand challenges and position them for long-term success.
What changes have been made to the board?
Ed Galante has been elected as the new chair of the board, and new directors have been appointed, including Chris Kuhn and Scott Sutton. These changes bring fresh perspectives and expertise to the board, which should support Celanese's strategic initiatives.
Key takeaways. In summary, Celanese has navigated a challenging year with strategic cost reductions and a focus on growth in high-value applications. Despite a decline in net sales, they delivered a strong adjusted EPS and exceeded cost reduction targets. John, any final thoughts on Celanese's investment prospects?
Celanese's proactive approach to cost management and strategic focus on high-growth areas position them well for future recovery. While short-term challenges remain, their long-term prospects look promising, especially as demand in key markets stabilizes.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Celanese's performance in the comments below.